Hey guys, welcome back to another episode with CoinHash. Today, we'll be talking about the potential second crash for Bitcoin's price in the coming weeks. So if you do not want to miss out on time-sensitive, crucial crypto information, be sure to subscribe to our YouTube channel and click on the notification bell. So in today's topic, whether the Bitcoin's price will pump or dump, we'll be discussing about the potential crypto winter lasting for another 6 weeks. So we've discussed about the Wyckoff theory in our previous videos, and there was indeed a huge dip in Bitcoin's price on the 22nd of June at the $28,000 range. So many thought that this would be the spring phase for the Wyckoff accumulation charts, and the next phase many expected a recovery. And if you're curious as to why many have come to this conclusion, check out our previous video on our YouTube channel. So in this article, experts and analysts warn that Bitcoin winter might last another 6 weeks. So as of today, this would mean the accumulation phase is predicted to last another month. So far, this has been pretty accurate because the deviation of Bitcoin's price from the expected recovery phase we are supposed to see kind of proves that the Wyckoff Spring hasn't actually happened. So this expert has also tweeted that most people assume the Wyckoff accumulation phase to be quicker than it actually is, and also ignoring the magnitude of the drawdown. This means that Bitcoin Spring might not be over just yet. So according to the chart and past history, we might still be in the accumulation phase, so when the actual spring comes, a further crash below 28,000 is expected. Now, the current market sentiment also aligns with the expectation of a bigger crash. One of the reasons why market sentiment is so negative recently is due to the increase in regulations on crypto. Various crypto exchanges around the world are being regulated in some way. So for example, we have merchants prohibiting the depositing of funds to Binance in the UK, we have Barclays, Santander, as well as faster payments. So a further look at the Barclays example, they announced that they are stopping payments made by credit or debit cards until further notice. And the reason for doing so is to keep the investors' money safe. The response was not great, and many Barclays users are not pleased with this new regulation, as they believe that they should be able to decide where they want to spend their money. So implementation of such regulations have been on the rise recently, causing worry in the community about crypto's future. And unfortunately, many investors fall prey to misleading headlines without actually knowing the full story and situation, which causes unnecessary fear, uncertainty and doubt. So just to clarify, these merchants still allow the withdrawal of funds, so any holdings on exchanges are not frozen or confiscated like many assume to be. These regulations also do not mean that investors in the UK can no longer purchase crypto. They just need to find other depositing methods like using other payment methods or using traditional methods such as bank transfer. So this just increases the difficulty to purchase crypto, which is what these newer regulations aim to achieve at the end of the day. Now another misleading headline is this article stating that Binance has been banned by the UK regulator. When we go into further detail, we will realize that the ban is on Binance Market Limited, which is a separate legal entity from Binance.com. And Binance has already clarified that the FCA UK notice has no direct impact on the services provided by Binance.com, which is the normal spot exchange that many use. The regulation is on derivatives trading, which includes futures contracts and options. So only the riskier forms of leverage trading have been banned. What this means is spot trading, which is the act of buying and selling crypto at a market price, is still allowed. So what this means is the average investor are unaffected, and those that didn't read these articles properly are causing unnecessary FUD in the market. Now to the big topic for today's video, we'll be talking about the Gbtc unlocking in July. What exactly is Gbtc? So just a quick summary, the Grayscale Bitcoin Trust is a financial vehicle that enables investors to trade shares in trusts holding large pools of Bitcoin. So these investors are referring to the larger financial institutions. So the shares in the fund track the price of Bitcoin, but only roughly. So I'll explain this later on. Why is the Grayscale Bitcoin Trust so popular? The Grayscale Bitcoin Trust allows investors and financial institutions to invest in Bitcoin without going through large hurdles just to have a foothold in the crypto market. So investors are willing to pay a small premium to avoid regulatory and tax concerns when investing in Bitcoin via Gbtc. However, the downside of investing in Gbtc is that there's a 6-month lockup period before you can receive your Bitcoin that you have invested in. So now the great concern everybody has is the fact that $40,000 Bitcoin will be unlocked in the month of July. The biggest being on 18th of July, where over 16,000 Bitcoin will be unlocked in one day. So the concern is that once these unlocks happen, the supply of Bitcoin in the market will be flooded, and by basic economics, the price of Bitcoin is expected to fall. Furthermore, investors now have more incentive to buy Gbtc shares rather than Bitcoin. and it diverts some of this buying pressure on the Bitcoin spot markets, making it bearish. Why is that an incentive? That is because the Gbtc shares are trading at a discount currently when it usually trades at a premium. So the Gbtc premium is the difference between the value of assets. So for example, Bitcoin held by the trust in comparison with the market price of these holdings. So this premium exists due to institutional demand that drives the Gbtc fund. However, on the other hand, there are experts that believe that this Gbtc unlocking will not have such a great impact on Bitcoin's price, mainly because the Gbtc is trading at a discount. Owners of this newly unlocked Bitcoin might not immediately sell it off as they will be realizing paper losses. All in all, we should pay great attention to Bitcoin's price in the coming weeks and be prepared for the worst. And on that note, if you guys are looking to invest in crypto but are unsure and afraid of what to do, you can check out our Crypto Secrets Masterclass at CoinHash, where we provide close guidance and mentorship, teaching you about the technical and fundamental analysis to help you make predictable and profitable trades. Link is in the description. So just some price technical analysis on Bitcoin. We are now looking at the daily chart, and I've drawn out this downward trend line which Bitcoin has respected a lot in the past few days. We have saw countless times Bitcoin trying to break out of this trend line, but even just yesterday, Bitcoin failed to break out of this downward moving trend line. There are also analysts noticing this inverse cup and handle pattern, which is a bearish pattern for Bitcoin, indicating that Bitcoin could reach the lows of 24,000 in the coming weeks. Now, with the current negative market sentiment, I think it would not be a surprise if Bitcoin does reach the low 20,000s. But if you're a long-term investor, you should think about Bitcoin's price in the long run. So when comparing Bitcoin's price to the S&P 500, we can see how they are correlated. These lows of Bitcoin, for example the one in January as well as the one in May, also correlates to the lows in the S&P 500. I personally believe that the bull run is still not over, and we can use the reliable stock-to-flow model that many experts use to see when the bull market will peak. So just by looking at the charts, the bull market is expected to peak in the year of 2022. The next 6 months will definitely be a make it or break it for Bitcoin's price. If everything goes to plan, investors believe that the peak of the bull market will be at the year 2022 and Bitcoin's price will reach a minimum of $100,000. Of course, everyone is hoping for this to happen. However, we cannot rule out the chance that Bitcoin's price might deviate. Currently, Bitcoin's price is deviating quite a lot from the stock-to-flow model, and if this deviation continues, we might actually see the possibility of a bear market. If Bitcoin's price were to fall off the charts of the stock-to-flow model and start heading in a downward trend, it will be the first time this reliable stock-to-flow model will be inaccurate. This will definitely raise the concern for Bitcoin's price and its future. Of course, none of this is financial advice, and this is just my opinion. So I said it before and I'll say it again. If you're looking to buy Bitcoin, buying right now is pretty risky in my own opinion. And it is safer if you set buy levels at the lower $30,000 levels and have some spare cash ready in case this major $30,000 level breaks. I know some of you might worry that Bitcoin's price might take off anytime and you can no longer see the price of, let's say, $33,000, so you just want to jump right in and right now. I said it before, Bitcoin is trading between these two channels, the upper limit of $42,000 as well as the lower limit of $30,000. Everything inside these two channels are just noise. We can only confirm a bullish reversal when Bitcoin can cleanly break through the $42,000 levels and subsequent resistance levels. So right now, I just recommend you guys to play safe and set lower buy orders while sitting at the sideline. And of course, this is not financial advice. I'm just sharing what I am also personally doing myself. So I have set buy orders for Bitcoin at the $30,000 levels, as well as a few buy orders below this major support level between $24,000 and $28,000 levels. If you're looking at well-established altcoins like me, you can also do the same by setting buy orders at or below major support levels. So what other coins I'm looking at right now are Cardano, Ethereum, vechain, matic, and Solana. I personally believe a slightly lower price for all these altcoins will be a major discount given their projects and their projected price in the future. Investing should be easy and stress-free. So if you're losing sleep at night seeing your portfolio being red, this just means you have overinvested. So always remember to invest an amount that you're comfortable with. That said, invest safe, guys. So I've come to the end of today's video. If you guys like what you see, make sure to subscribe to our YouTube channel and click on the notification bell, as well as follow all our social media pages such as our Instagram as well as Spotify. So thank you guys for watching once again and have a nice day.